I'm going to show how Seneca can save billions of dollars for the banking industry and its customers using AI that utilizes Seneca's zero knowledge environments. In banking and insurance, uncertainty is risk and risk costs money. Someone will pay for the uncertainty. In the case of a working capital loan, one of the major sources of risk is the borrower's customers. But for a variety of reasons, a borrower can't or won't just hand over their customer information. But with zero knowledge environments, we're going to show how a borrower can reduce uncertainty by bringing highly sensitive information into the application, but without ever actually sharing the information. All right. So what I'm showing you right now is a decentralized bank that I made up. It's Decent Bank. They provide quotes for working capital loans based on a pricing model that I trained it on. So you can think of the training model as no different than the bank's algorithm, which it is. So I've already submitted a banking application using Decent Bank. It was trained on, and I'm going to ask it for a quote. So I would like a quote based with rates and terms based on my loan application. Okay, so it gives me a quote, 4.66% on a 12-week term. So keep in mind, the bank does not see the application. The application is in a zero knowledge environment. It's saying that if we share, or share is the wrong word, but if we provide customer information and receivables, it can potentially refine the quote. So let's do that. All right, I'm gonna have to zoom out a little bit. All right, so you can see it gives me a refined quote. My rate drops from 4.66% to 4.59%, saving an estimated 142K. So keep in mind, none of this has actually been shared. It's all in a zero knowledge environment. So that the bank is able to provide quotes with their algorithm, accessing data that they've never seen before, right? The idea that a bank could get all of this information to provide a refined quote just does not exist on centralized infrastructure, because on centralized infrastructure, providing data would be sharing data, and you signing over or handing over confidential information, violating NDAs, it's just not going to happen. So in this particular case, if this were a real application, we could still give permission to provide the data on the loan application so that the bank, the bank has to know their customer, but keep the customer information and receivables within the zero knowledge environment. So the bank has cryptographic proof that that information exists and that it met their algorithm, but they never actually see the data or the information. So in this case, on a model that's trained with real banking data, we've shown how we can save 142K across an industry that's billions or even trillions. When you think of all the other applications that you think about it, any bank in the future that's not building an application on Seneca and not utilizing zero knowledge environments will not be able to compete.